Hello, everyone. This is Sergio Marrero, and here with another episode of RBL1 Live, we have Shruti Gandhi, who is the founding engineer and general partner of Array Ventures. Thanks for joining us tonight, Shruti.
Hi, thank you for having me, Sergio. This is exciting.
Yeah, thank you for making the time. I'm going to share the audience a little bit about Shruti's background. So she graduated from Mars College. She has a master's from Columbia University in New York, and then also has her MBA from Booth, the University of Chicago. And in her background, she's been an engineer, founder, and also investor. So excited to dive in and hear a little bit more. But I'll kick it off. If you could share with the audience a little bit about Array Ventures.
Array invests in enterprise companies. I started Array about 6 years ago with the gap in the market that I saw, that there are not enough funds out there who understand enterprise pretty well, which is data companies, AI/ML companies, B2B companies, security companies, things like that. And so that's what we invest in. We like being the first check. We like leading when we can. And my quick background before Array was I was an investor at another firm for a few years. And I was a founder before that. And I was an engineer for a decade before that. So this all kind of naturally led to what I'm doing today.
And why the focus on you say AI, ML, big data, and particularly enterprise? How did you why that focus?
Actually, it's a great question. So when I was starting Array, it kind of the story is my founders said, hey, if you're going to invest, we're going to invest with you. And this was founders that I'd already been working with in the past. So when I kind of started digging in more into why they're saying that, it was clear there was a need in the market for someone technical that understood venture and founder, so all mixed in together as a firm makes us valuable. And why that is the case is we also focus a lot on what we call the go-to-market journey, 0 to 1 to 10. That is our value add, and how we focus on helping companies get from 0 to 1 to 10 is through our expertise. Our goal is to take our companies to Series A, and everything that is needed on the sales, marketing, product front, and many other things, positioning, everything else, we kind of help on that front. And there's not enough funds out there that do that. And my background lends, me to be differentiated here. There's a lot of money out there for people who understand consumer or just, applications that are more consumer centric, even in enterprise, well. So that's a differentiation. So there's the way I look at enterprise generally is the infrastructure layer. That's and the middle layer. That's more like APIs. Infrastructure is more like snowflakes and databases and so forth. And then there's the application layer, and we like to focus a lot on the middle and the infrastructure layer. We'll still do some application deals, but layer deals. But we like, as a firm, we're facile across all the layers of the stack.
Amazing. And what you mentioned, you find them, you like being the first check. Can you talk a little bit about what you look for in an early stage startup and what size checks you write?
Early stage startups generally are just being formed when we invest. These are folks that haven't taken much money or any money in the past. They're just being formed. They are leaving some very good, high-paid jobs at big tech companies, usually, or somewhere else, with the idea and agitation that they want to go solve this problem so bad that they're taking that risk in their careers to go make something big happen. That's when we partner with them, help them figure out what the next stage would be and how we can be a good partner to them. And the check sizes on an average tend to be about $1 million plus. So we like to lead those rounds when we can or follow accordingly.
Excellent. And at that stage, when it's so early, what are you really looking for in an early stage venture? What makes them stand out from the rest? I've seen a lot of presentations that are, I call it, at the team and dream phase. How do you pick out your preferred investments from that stack?
Yeah, it's straightforward. We look for team and dream, but someone that has shown some track record of executing in the past, which is not just as a founder, but even in their jobs. Um, what we look for is technical founders who've built before and have an ability to also sell, which is pretty rare. And it's not that we're not looking for them to have sales jobs in the past, but something that sometimes when you just meet people, you just know that they have the a great eye towards closing deals, or being more sales first and not just building in vacuum. So those are the kinds of things we look for in founders. In addition to also like tech first, having them being able to build their product themselves within the company.
Excellent. For those that, I mean, you've in the past 6 years, you've invested in a long list of companies, and even have some great exits to PayPal, ServiceNow, was it Hy-Vee that was managed by WeWork,
and then right by WeWork. Yeah, exactly.
Yeah, so I mean, with this success, can you take a step back for us and tell us, how did you what first made you want to take the leap and start your own fund?
Well, I'll take you a little bit even one step before that, which is why I got into venture. As a founder, I realized for me that there's ways to build different companies, and the venture-backed journey was very interesting to me. The venture-backed journey is the one that I call the 0 to 1 to 10 kind of a thing in a way, which is how fast you become $100 million company, and what does it take to build a company that is such high velocity, like on many fronts. That was a kind of like my curiosity, and which is what led me into venture, because I wanted to reverse engineer venture and build my next company to be so fast growing that it was that everything would happen as fast as like what we read about in on TechCrunch and stuff. So that was a curiosity. So I got into venture, and I was on a few sides of venture. I was first in corporate venture at Samsung. Then I was in a very good and well-known firm, financial engineer firm, it's True Ventures. And then I was literally going to go start a company, and that company ended up becoming a fund, which is a different kind of company. But the goal, what I learned there was the ability for founders to look at me and say, you went to bat for us, you get it. You get how things are built with your engineering background. And you can also tell us, crisply and transparent ways of how to get from that 0 to 1 to 10 journey, which is your forte. So, why don't you do this? And by the way, you can have our money too. So that was how our fund was really born. It was not something I thought, I knew I wanted to start a fund, but I didn't think it was going to be something I did, so early on in my career in many ways. I thought it was meant for people who did it much later in their life. So that's the early days, and I'm loving every part of it. And we've now invested in about over 50 companies, I would say. And many of them are repeat founders that I worked with even, in my Samsung or True other days. It kind of brings me that joy that I'm able to have those relationships with people and continue to add value years and years and years out as well. So yeah, I love what I do.
Amazing. Why the name Array Ventures?
Array was its first data structure I learned in my computer science class. It's where data is stored. And I invest in data-driven companies, data companies. So it's a natural.
It all makes sense. Yeah. I when I saw your term, the founding engineer, was like, okay, I love this. You probably have a lot of systems. And actually, that's a good question for you in terms of venture capital and everything that's changing, right? I feel like venture capital, for the most part, has been a similar approach for many decades. In what ways do you see technology and crowdfunding and these trends really changing venture capital?
I think I talk about this a lot with my team. Patterns are changing, and so there's two ways to think about it. One is what kind of founders are starting companies, right? That's one, and the second is how you pick them. That's the patterns VCs have. So the first category is straightforward. It's not even a question. We're entering this. The past few years is the first time I would say where we're thinking about diversity as a lens, and it should have been soon, much like a long time ago, but it's happening finally now. And so, and you're seeing a living and breathing example of that. Me, I'm a diverse manager, very unusual in the industry. Woman is one lens, and second is I'm an Indian woman. There's really not many Indian women run fund. Person of color, especially now in enterprise. You know, think of, you know, consumer and enterprise. If you kind of divide the world that way, enterprise requires, you know, a different kind of background. So having said that, we're going to see very different kind of founders in the industry start companies. And what is not happening yet, but it is about to, and we're on the cusp, is diverse managers like me getting into business. And so we don't have the same patterns as what the industry's had so far, which is, I don't know, 23-year-old Stanford ramen eater dropout or whatever. That's not what we're looking for anymore. We have very different patterns, and we've seen with data from all around the world that companies can come from, you know, people like Jack Ma, or people that are not just what we are used to seeing. And that's the beauty of what putting a people like me in decision making can happen. The patterns change. And so in the future of venture is diverse. The future of venture is different signals. And we're in the midst of figuring out what those signals look like right now. Because what's happening is we're writing this playbook that's going to be written down in history 10 years from now, where we will talk about these inflection points of like, we don't know today what that Stanford dropout playbook today is, because it's not the same. The founders that are succeeding today, you know, the Stitch Fix founder or whatever, we don't know what those playbooks are, other than they're hustlers. They will make whatever it takes to make it work. And those are the people we want to back. But those signals are not clear today. But that's what 10 years from now, when you say like what is going to be in venture, people who recognize those signals today are the ones that are probably going to be talking about what they looked for today. But we're still in the middle of it. And I can say I'm good at it, but there's no data because companies are not going public today. 10 years from now, they will go public. And then I can say, this is what I looked for in those people, and those patterns were different. So that's what's going to be different in venture, I would say 5 to 10 years from now. And I'm very excited about it.
Amazing. If you look specifically at some of the companies that you've backed, can you talk about you know, the one of your earliest investments, and like what is it that you know that you do? Is it the selection? Is it what you do afterwards because they're so early? Is it relationships with these enterprise companies? What is it that makes partnering with Array Ventures special?
I think it's all of the above. First of all, we look for folks. So it's a hard job that I have, which is, like you're investing in technical founders and technical companies, but they haven't built much yet. And that's the hard part, because evaluating that for most people would not be that easy. So that's the one thing that we're good at. The second thing we're good at is, once we build out this set of investments and so forth, we're really good at showing them the hustle and the support system needed to get through the 0 to 1 to 10 journey. oftentimes founders will come to me and say, oh, I'm thinking of building this company. And I ask, well, when do you think you want to go public? Um, and they'll say like, well, Datadog did this in this many years, Snowflake did it in this many years, UiPath this, and so they have the data, but they're just not processing that. If they want to go public in 10 years, year one and year two also need to mimic that. And those were, not every company had a linear path up, but the work needs to be done, the tech needs to be built. And that's the kind of stuff we help our companies think through, and how we get there together, what it's needed to get there, what kind of hires they need to make, what playbooks they need to execute on. And if you're reading about a playbook on TechCrunch, it's too late. It's been done. So you need a new one. And that's what we help them think through, what the new one would look like.
Specifically in for enterprise companies, what are some of the unique challenges and ways to overcome those challenges in this space?
Yeah, they take a while to get to the 0 to 1 journey, right? Because the nature of enterprise companies is it's a complex product, requires a lot of integrations. And for it to be enterprise grade, it needs to pass security clearance and all this other good stuff. So having said that, you cannot just build that overnight, and you cannot just build that and experiment and start getting traction in like 6 months or something. That's the goal, but hard products take a while to build. And so they actually go through like the J curve people talk about, which it takes a lot more resources first to build, and then you invest in the sales and marketing, and then hopefully they take off. And then, but the U part of the J curve still requires you to keep talking to customers, keep them excited, make them use your MVP product, which is probably not the best, right? And still keep them wanting your product a year, 2 years out. All hard problems. So that's what's different with the enterprise companies. And I think founders that do that well, again, as I say, are good at building fast, and also managing customer relationships and sales pretty well.
It's really fascinating, especially with the focus on this. It's like high tech, especially in the enterprise space. There aren't too many folks that are focusing on that space specifically. So in terms of identifying these early stage founders, what helps you identify that these pipelines, especially early, right? Are they so early in the journey where it just may be a concept?
As I said, I think for me, it's a few things. I think it's a product, market, and then founder fit. So product needs to be something they are working on that they're excited about. And but then they have to have that experience in it before. If a founder has background in security and then comes to you and tells you they want to work on something else in the stack, I don't know, like a real estate company, it's probably not exciting for me to be looking at them. But if they're now saying, hey, I have this different perspective on why security is going to be adopted differently in enterprise tomorrow, and here are the 2 ways we're going to go solve for it, that is what I back, the product, market, and founder fit. The big thing that is a little bit different for us is like the market may not be as big initially. So I'm willing to bet on founders that are smart, but going after some niche solution that eventually will become big because they're smart enough to figure that out down the road. So that's sort of some of the things we look for.
And I imagine too, it makes a lot of sense if you're investing, let's say, $1 million checks, right, at such an early stage. They'll have the capital to make that bridge and go and go the distance. Shifting gears and doubling down, what are some of the spaces that you're excited about within? You mentioned the foundational layer and the middle layer, but what are trends that you're looking for in the space? Or yeah, what are trends? I'll pause there and let you answer that.
We, I mean, published something earlier this year. Here's, I just pasted it to some areas I'm looking for. But that's not it. I mean, usually we like to be thesis driven, and we like to be pain points. We call ourselves like the pain point healers. I've never called myself that. I'm doing it now. But it's people who just want to solve problems that are specific in enterprise, and they know that they need to be solved just because they've been in enterprise world for so long that they just know that that needs to be taken care of. So those are the things that I think falls in the category of like, again, back to security, infrastructure, observability, things right now in ML world. There's a lot of ways to solve computer vision problems. People are not taking advantage of that today, or better ML tooling, AI ops companies, things like that. So that's the kind of stuff we invest in, and I think we are pretty much open to founders who are smart and are solving problems in this category to come and tell us why they want to solve these problems. So we have a general idea. I put some of the stuff out there. We keep doing that. If you follow me on social media, you'll see I'm always looking for something new at the time. And I put my intent out there of what I'm looking for. But again, we're open as long as you fit in this category of B2B AI ML data company, and you haven't raised much and you haven't experienced in that background in space, reach out to us.
Are there any particular unique, we all know about the challenges COVID presented, but are there any unique, stories of that you saw your founders innovate through or pivot during the time that you'd be open to share?
Yeah, what I realized was I have some tremendous founders in my portfolio. Because I don't know if you remember this, I'm sure you do, but in like last year when the lockdown went into effect in March, everyone was doing triage and planning of how long the companies have money for, how long are they going to last, what's their runway. And the part I was impressed by with most of my founders, and I thought I did my job well there, was either some companies that are just raised, so that's peace of mind, they at least had 2 years, or they were looking into my eye on Zoom or wherever and telling me, look, we've done this before, and even if this means we have to take no salaries for this many years, or we figure out our burn in some other ways, we will make it happen. I mean, look, for me, there's a lot of other things that are happening in everyone's lives. It's not what I expect from founders, because like everyone has things and responsibilities that they have to take care of on their end. But the fact that the founders had that scrappiness, and that I wouldn't want to say, this is not the right word, but the fiduciary duty, kind of a sense of obligation towards not me, but like the bigger vision that they originally pitched, and they were not BSing about it, right? That's the part that I think made me want to like really like bring tears to my eyes, because it's truly those founders that I want to back. And I did. But this was a test in time that we all were put through. And many people could have taken PPE and all this other stuff, but they didn't, because they still said, no, I can make it work. This deserves to be allocated to someone that really cares or needs. Those are the things that coming out of our founder's mouth made me feel like I have really backed people with high integrity, value, hustle. And those are the things, that you can just, you can ask people, but you really can't, right? Like a conversation with the founders, we're not going to ask you what's your integrity level here. So those are the things that kind of like reflect in those situations that made me feel that the COVID was a real, green check for me, in terms of whatever I'm doing in my process of evaluating people. And as we talked about it, the patterns, those patterns are adding up. Maybe I didn't look for the same patterns, but I looked for something else that the founders are really kind of validating it for me now, and successfully getting on the other side. So that's I would say like a high level thing. We have some individual stories as well, but yeah, but that's what my general realization was.
And for you, I know that you are, you have a team, but primarily a solo GP. When you decided, can you talk about how you got started? Like some of the things that, in terms of finding your first LPs and kind of getting the fund rolling. We have a number of emerging fund managers that are part of the audience, so would love you to share some of your insight and advice in that regard.
Yeah, I think I mentioned my early days was basically founder led, them telling me this was something I should do and them backing me with it. I had backed them in their journeys and they had exits. And they said we would back you too. And they meant it. So that's, I think, been my recurring part of my life, of me trusting people and them trusting me. Keeping those relationships as well is important. So I wouldn't say, like, the first check was actually funnily a founder who I couldn't back. And I was going to bat for them. I couldn't get convinced Samsung to back that company. And I went around trying to make that happen. Eventually, they got acquired literally 2 months later by Google for a very good sum. And that's when those guys, basically when I was starting this, said, you went to bat for us and we want to be. So both those founders were my first two checks, for example. Isn't that cool? Like that's
amazing.
Yeah. So I think that kind of validates those stories of how those founders, I mean, to me, that is my story, which is,
you believed in them as founders, and then they believed as you as a founder of funds, right? So it's goes full circle, which is really
powerful. But I didn't even back them because when you're at a partnership, you have to get a approval from other people. So the fact that they still believed in me beyond that, is powerful, because I was able to help them out and I tried my best, and they could see that. So I think that's the power of hustle matters, right? And I think they saw that in me.
That's amazing. Awesome. I know we're just about time. If you could share with the audience a little bit on what's next for Array Ventures.
What's next is we want to be the first call you make when you're starting to think about starting an enterprise company, basically. So, I think, again, there's a lot of money out there, and founders are always overwhelmed with how to make those decisions. We actually have a blog post coming out on that. But I think it is really hard to get money from people who understand the category. And getting those people on your side actually means growing your company 10x more in the early days, which matters. So get the right investor on your cap table. And for enterprise company, I hope you call us. Enterprise is anything from B2B, SaaS, AI, machine learning, SaaS, security, all the things I mentioned. And if you're doing anything vertical, enterprise, B2B, I mean, feel free to call us anyway. I think it depends on the category you're solving the problem in, but we have companies in health, IT, and prop tech, and many other categories as well. So we're open to that too. As long as you're B2B, we're excited to, and you have a good tech team, we're excited to back you.
Amazing. So thank you very much, Shruti, for joining us. For those that are watching, this is Rebel One Live, Shruti Gandhi, general partner and founding engineer of Array Ventures. So thank you for joining us tonight and sharing your story. Appreciate it.
Thank you so much for having me. This was phenomenal. Thank you for all these amazing questions.